Right, welcome back. So today, we learned chapter 7 and chapter 8, which was dealing with perpetual inventory. Now we're going to be moving on to a completely new section in regards to business, okay? And that's just dealing with just what happens when we have to deal with cash and what happens when we have to deal with credit cards, and then other things is dealing with accounts receivable, okay? So in this case, right, we're going to take a look at the first chapter here, which is chapter 9, which is about cash, okay? So cash, credit cards, and EFTs, okay? So first off, what is cash? Pretty straightforward answer. It's some kind of means of being able to trade for a good or service, right? In this case, we use the US dollar, right? That's our means that we use in order to trade for goods and services, right? Pretty straightforward, right? We live in the United States, therefore we use the US dollar, okay? The US dollar is actually a pretty strong form of currency. As you know, you can travel and use this type of currency overseas as well. So it's pretty universal in regards to the ability to be able to trade goods and services for any type of goods. Okay, especially in other foreign countries, right? Some of them prefer the US dollar or they accept the US dollar. Okay. All right. And of course, nowadays, we this type of form of currency, right? A check, all right? It's still commonly used today, right? If you, when you receive a paycheck, right, it's written in a form of a check. But for most businesses, they would 100% use checks to record the transactions. So these still does exist today. However, as we all know, right, with the vast majority of using credit cards and things like that, it's just a little more convenient than having to carry around a checkbook and be able to write out a check. Okay, so again, a lot of businesses use checks to keep a nice good track record of where their money goes and what happens to it. Now, as you can see, here's an example of a check. Usually should have the company's name. Okay, at the very bottom should have the account number and routing number. All right, and of course, there are 5 things that you must have in order to make a check valid. Okay, number 1 is going to be the name of the person that you're paying, right? It must be exact. Okay, I think you can do nicknames, but if it's going to someone else's account, you want to make sure that it is the exact name or similar to what it's supposed to be. Okay. And then the next thing is going to be the date. The date is very, very important because that allows you, as the person who wrote the check, it allows you to make the check available on that date. Now, if you're writing a check that same day, then you can use the same date. But you can also send out checks that are already predated, where you're not able to cash it out until a specific date. So that's very important that you have that there on to let you know when is the money available. Okay. Third thing is, of course, the amount. All right. There, you cannot give a blank check because you need to have the amount so you can confirm how much is being taken out. All right. And of course, you need the account number down at the bottom, right? So you know exactly where the money is coming out from. And last but not least, you need a signature. Okay, a signature is a form of authorization to validate that this check is written and approved for this amount to this exact person. Okay, so again, think of it like a paycheck, right? You have the amount that you've earned. You have the date. Usually, it could be pre-printed out to make it available on Fridays only, whatever days that you usually get payday. So you could receive your check on Wednesday or Thursday, but you can't cash out till Friday. And again, you would have the boss's signature at the very bottom. Okay. Then we're going to talk about credit cards. So again, credit cards have been the most, up to date, convenient type of way to transfer money, right? Especially when you can just carry this around in your wallet and you could just charge, right? Now, there's a few things you need to know if you are either the person who is the card holder or the person who is accepting card charges. So if you are the card holder, obviously, when you own a Visa, MasterCard, Discover, whatever credit card that you own, it's technically, basically, you're paying a bank or some kind of lender to basically have the money readily available for you in advance, and then you pay them back, right? So in these cases, credit cards are liabilities. They are not actually yours unless it's a dual type of debit/credit card system, which does exist, right? Your debit card sometimes has the credit card symbol on there that you can use your debit card as a credit card. Okay. But that's just the card holder standpoint, right? If you charged the credit card, right, then you're obligated to have to pay those credit cards back. Now, if you are the retail store that accepts the credit card, right, there's a few things that you need to know and rules that you need to know. If you actually are accepting credit cards, right, they will charge you a percentage of your sales, or they give you a flat rate. So in this case, right, because what they're doing is they've collected the money for you in advance. As in, once they charge the card, right, they basically get the money for you without you having to collect the debt. They assume the debt, okay? And with that being said, of course, they're not going to do it for free. They're going to want to take some part of either the sales or it's a flat rate, okay? So that's why if you ever talk to many independent contractors or, people who work for themselves or small businesses, right, they're most likely not going to accept credit cards because they can't afford to pay these credit card companies a chunk of their sales, because maybe their sales is not as strong as you think, or when you have a cash basis, right, or you accept cash only, you get 100% of the profit instead of only 95% of the profit, okay? So that is one of the key factors that you need to know. But of course, when you are accepting these credit card companies, right, usually Visa, MasterCard, usually they come together. So they are together. But any other form of credit cards, they usually charge separately. Okay, just a little FYI so you know exactly if you do plan on either working at a business and you accept credit cards, that yes, you don't get the profits 100%, you only get a portion, but it's usually 98%, you'd get 98%, but they charge you either anywhere from 1 to 5%, okay, or it's a flat rate, okay? But again, it's the most convenient way to just pay for things, right? If you guys, there's a business credit card. So it's just a more convenient and easy way to also keep track of your transactions, because you have a record when you go to either the credit card statement. It tells you your exact date, exact transaction, and exact amount. So in this case, it just makes it more easier to keep track of. Okay. And last but not least, we have electronic funds transfers. This is going to be the most common one that's been introduced quite a few years from now. right? Especially when we travel and we, purchase things and we don't have wallets or anything like that, right? They again, this is like another form of transaction that even the government uses to collect sales tax or even federal taxes, right? So what this is going to be an electronic funds transfer where you are linking each other's banks accounts, and what you're doing is you're wiring the money electronically, right? The more popular one that's used between the consumers is going to be Zelle, right? Zelle is backed up by both Bank of America, Chase, Wells Fargo. All those banks use Zelle to transfer money to other people, right? You can also do that for the the individual stores too. If you guys know things like Apple Pay, right? That's a form of an EFT right there. Okay. So again, with the vast advancements in technology, therefore it makes it just that much more easier to transfer money, or to have a transaction. Okay, and the great thing about having Zelle or Apple Pay or things like that, it also keeps track of it for you, because you're linking either your bank account or a credit card account number to that exact transaction, and it basically records it very, very, very easily. Okay, so that's what EFTs are, and yeah, it's just another easy form of way to transfer money. Okay. Now, so now that we talked about all the different forms of how we can receive money, right? This is going to be talking about a specific part of cash, okay, that is commonly used usually for smaller businesses. Major corporation or businesses would definitely use a different type of system, but for small businesses, we would typically have what's called a petty cash drawer, okay? Now, again, the petty cash drawer, what does it do? Well, it serves to be kind of like extra money for minor expenses, okay? It's a lockbox that you have cash in it, and what you do is you use that for any minor business expenses, okay? So an example, right? If you're a photocopy center, right, and you're down to your last box of printer paper, and it's the middle of the day, and you know that your customers usually pull in around 2 or 3 o'clock in the afternoon, or even after work, right? So you're running low on paper. What do? Well, if you don't have a business credit card, what you can do is, if you have a petty cash drawer, then you can have someone take money out from the petty cash drawer to go out and buy a ream of paper, right, as a business minor expense. You can use this if you have employees that you don't really trust with a business credit card, right? So in this case, like, it's just a lockbox for your employees, or for somebody who needs to buy something for the company, for any minor business transaction, okay? It is not there to cash out in advance. It's not there to do anything other than that, but for any minor business transaction. So especially if you have to pay cash on delivery, right? And let's say your boss hasn't come into the office yet, and there's no way that you have to pay you can't write a check out because you're not the boss, right? You're just the person who just works there, and a simple employee, right? Then you could use the petty cash drawer to make those minor expenses, to pay for things that need to be paid for. Okay. So again, a couple things that are features or characteristics of a petty cash drawer is, one, a physical lockbox. Like, you actually have one that has either a key or some kind of code on there. Okay. And second thing is, you need to have a ledger account. Now, we didn't talk about the general ledger so much in this class, but you do need to create a ledger account in the general ledger to be able to keep track of how much money that you have in the petty cash drawer at all times. Okay. And again, it's for minor business expenses. You also can use it for reimbursements too. So again, it could also be if you do carry or have the business credit card and you want to put it in the lockbox right there, and then basically keep track record of who takes it and borrows it and puts it back, then yes. And then the second thing is when the petty cash drawer, gets borrowed money, right? You take money out from the petty cash drawer. The person who borrowed the money is obligated to come back and return with the exact change and the receipt. Okay, so that's very important that you do have that. Okay, and a great example, okay, of a typical form of a petty cash drawer or something that's similar would be a cash register, right? Cash register, same thing. It's a lockbox. It's got money in it. It's got receipts that come out of it, right? But it's slightly different when it comes to actually calculating how much is in the cash register versus the petty cash drawer. Okay. But we're gonna go ahead and take a look at this an example of how we establish a petty cash. Okay, so first off, this has to be going into works with the manager, the profit manager, and the boss as well. You guys have to agree on some kind of amount or guesstimate how much you think that minor expenses are going to come up. Okay, so again, this is going to be judged upon how the business is starting up, what other minor expenses that could occur. And then once you do that, you're going to establish an exact amount. Okay? You're also going to assign the petty cash drawer to somebody to be in charge of it. Okay? And once you've done that, so basically someone who manages it, right? Once money gets taken out from it, that person who's in charge of the petty cash drawer must write and record down how much money they took out from the petty cash drawer and how much that exact transaction was for, because that's the most important thing. Is you want to make sure that the account balance is always the same exact amount in the petty cash drawer. Okay? And again, you're going to also create the person who is in charge of it, or the bookkeeper. They're going to be creating a ledger account for it. Okay, so again, on January 5th, you establish a petty cash for $500. Okay, so when you establish, all right, you are going to debit your petty cash, and of course, how are you going to get the cash from? Where's it going to come from? Well, it's either you had cash laying around, or you have to write a check out from your bank and then put the money in there. Of course, best rule of thumb is you should definitely write a check. You shouldn't just dump your loose change in there, right? So in this case, right, you definitely want to write a check, because the thing about writing a check to the petty cash drawer or to the manager of whoever is in charge of the petty cash drawer, they're going to go down to the bank, cash that check out, and they can get the exact amount of cash that they need, right? So they can cash it out and get exactly, this amount of 20s, this amount of 10s, this amount of 1s, just to make the petty cash drawer a little more easier to manage, right? Instead of having big bills in there, you could say, well, you only need $20, so here, okay? So once a petty cash drawer is established, right, you're going to pop it into your ledger exactly like this, right? So there's your ledger, right? So here we establish the petty cash drawer at $500, making the account balance in the cash drawer at $500, okay? So again, there's actual cash in the lockbox for $500. Now, as you go through, right, how do you spend the petty cash drawer? Pretty simple, right? Like I've mentioned before. You, if anybody in the company needs to go run out and buy some minor business expense, right? They go up to the petty cash drawer, right? They have some options. They say, hey, I need to borrow this so I can go buy that. Okay? Their name is gonna be recorded, the amount's gonna be recorded, and they must come back with the exact change and the receipt amount. Okay? So again, as you go through and how you spend the money is that you're slowly going to have a pile of cash, and as you spend the money in the petty cash drawer, right, it gets replaced with receipts. Okay, so again, at the end of the day or at the end of the month, however long you keep your petty cash drawer open for, your goal is that at the end of the accounting period, your petty cash drawer must hold its value as the same amount that you either establish or whatever the petty cash drawer is currently holding the amount for. Because in this case, right, if you think about this, the cash drawer has cash, but if you keep spending the cash and putting it back with receipts, then your box at the end of the day should have a total cash receipts that equal up the amount of what you established the petty cash drawer for. Okay? So that's the idea here, is that eventually the petty cash drawer is going to be replaced with receipts. Okay? Now, here's a rule of thumb here. When we record transactions, do not take the transactions directly out from the petty cash account. Okay? This is very important because in this case, right, when we establish a petty cash, right, we must debit our petty cash or we credit our petty cash, right? Now, if I were to debit my petty cash, what does that tell me? That means I'm going to increase my cash flow, right? But if I credit my cash, that means I'm going to decrease my cash flow. And in this case, if your box is being filled with receipts that equal up the total amount in your petty cash drawer, then that's essentially saying, well, you have $500 worth of receipts in your petty cash drawer. Are you really losing money there? The value does not change, right? Instead of having cash, you just have it replaced with receipts instead. So that's why it's very important that you do not take it directly out from the petty cash drawer. Okay? So then how do I record my transactions? Well, let's go ahead and talk about that. So as the petty cash drawer, right, as it starts collecting all the receipts, right, like I've mentioned before, the manager is going to have their own little ledger account. Okay? This little ledger account, once again, tells you, right, the date, who took the money out, what was the reason that they bought, and what was the receipt written out for, right? How much did they borrow? How much did they, when they brought back the receipt with the exact change, how much was it? All right, and then what is your account balance in terms of cash that's available for the next person to take money out from? So in this case, right, this is going to be the petty cash drawer manager's job to keep track of a good track record of who takes money in and out from the petty cash drawer. Okay, so as you can see, we got John, Katie, we got Larry and Kyle, right? They all bought something, right? So they borrowed a couple, they borrowed money, and they came back with the exact change with the receipt. Okay, so as you can see, the receipt was for example, if I look at John, he bought printer ink he borrowed $80 from the petty cash drawer, came back with $76.59 on the receipt with the exact change of $3.41. Okay. So this is what I mean by keeping a good track record, right? Who's borrowing the money, and when they come back with the exact change and the receipt, you're going to record it, okay? And then once you reach the end where you're low on money, okay, then you need to either notify the boss to replenish the petty cash drawer, okay? Now, again, we were talking about how do you record this now. Now the bucket, or here in this case, the petty cash drawer, is just collecting a bunch of receipts, right? So this is what's going to be called an adjustment entry, okay? This usually happens at the end of a given accounting period. So in this case, right, our accounting period is at the end of every month. So as you can see, right, this was a list of all the transactions that happened from the beginning of January all the way to the very end of January. So in this case, I'm doing it at the end of the accounting period. Yes, you can also do it when you have low cash, but usually you want to make sure that that when you reach the ending of the accounting period that you do record these transactions. So what you do is you're going to essentially take all of the receipts, okay? You're going to list them all out as your expenses of whatever expenses that you made, okay? So again, you don't recognize these expenses as you go. This is the one where it's going to be an adjustment. So things that happen at the very end that you are recording now, okay, at the very end of the accounting period, okay? So if was it John bought printer ink as of the 18th of January, right? It doesn't get recognized until the end of January, okay? Because it was in the petty cash drawer. Now, of course, the ledger for the petty cash drawer is going to be a track record, right, of keeping track of when these events happen. But at the same time, right, when we talk about doing ledger accounts, when we dive into the business, right, you're going to assume that you have these items already. Okay? So again, you're gonna recognize all your expenses. So every single receipt that's in the box, you're gonna take it out and you're gonna calculate which expenses are what expenses. Okay? It makes it a lot more easier if you could list them out when you do your petty cash drawer ledger. See right here, you have printer ink, you have office supplies, you have those general reasons of why you borrowed the money. So then you can make it easier for you to sort it out and consider what expense these are made for, okay? And then what at the very end of this, right, you're going to write another check, right, to reimburse all of those expenses. So think of it this way, okay? You got a petty cash drawer, right? If it's full of receipts, when the purpose of it is supposed to have cash, what you're essentially doing is you're counting up all the receipts and you're going to write the check for the exact amount of receipts in there. So then that money basically gets replaced and put back into the petty cash drawer. Okay? I hope this makes sense. So in this case, right, I'm basically taking and counting all the number of receipts and I'm going to replace it with money by writing out the check for the exact amount of receipts that I have in that petty cash drawer. And that's how you replenish or you put money back into the petty cash drawer and recognize all of the transactions that occurred when you were using the petty cash drawer, okay? So once again, never ever use petty cash to take out money or to record the transactions, okay? In this case, that's not the correct way to do it, all right? Best way to do it is to hold off till the end of the month or the end of the week, calculate your total amount of receipts and place them into their correct accounts, and then just simply write a check, okay? So once on January 31st, I write out that check out for the $443.18, what's going to happen is that money is going to go right back into the petty cash drawer. So then for the month of February, you have exactly $500 to start out and spend again. Okay? Any questions so far?
No.
Okay. So now let's talk about, well, what's the purpose of how do we increase or decrease a petty cash drawer? So straightforward, like I've mentioned before, right? You would either you would have to talk to the manager and say, well, this month we were way too short on the petty cash drawer, or we just don't have enough money for the expenses, right? Or we were very, very close to taking out too much money from the petty cash drawer. So what's going to happen is that once you have that, you're going to establish, well, how much money do you want to increase the petty cash drawer for? And if you're going to increase it, right, you're going to have to figure out how much you want to increase the petty cash cash drawer to. So in this case, right, if I want my petty cash drawer to have a grand total of $750, right? Right now it's currently $500, right? Because that was the original journal. But if I want to increase it, I simply do this. If I want a specific amount, I need to find the difference in order to get the amount. So if I want $750 in my petty cash drawer, I'm going to say, well, I'm going to increase my petty cash drawer by $250. Okay? So same thing here. You're going to debit your petty cash and you're going to credit your checking. You're going to pop it into your ledger. So in this case, right, if I established it in January at $500 and I'm going to add an additional $250, then I should have a total in my petty cash drawer for $750. Okay? Now that's just to establish, that's to increase the petty cash drawer. Once again, that is not how we take money out, or that's not how we put money back into the petty cash drawer, okay? This is to increase the amount that's in the actual drawer. And then once again, you're going to go through the transactions once again. And in this case here, I have all these receipts, and I'm going to put back $178 back into the petty cash drawer. Okay. So then last but not least, how do you close out the petty cash drawer? Well, if in order to increase it, I would debit the account. In order to decrease it, I would credit the account. So that's the same idea here. If you choose to one day no longer use the petty cash drawer because of many reasons that you have that you don't necessarily need it anymore, maybe you applied for a business credit card and you can have it available for someone to authorize to have someone just use it to make those minor business expenses. Or you can use the idea where you can have your employees buy the things and come proof with the with the receipt to have a reimbursement. So in this case, if you choose to close out your petty cash drawer, you would debit your checking, because what would you do with the wad of cash, right? You don't just pocket into your pocket, right? You would basically put it into your checking account and you would credit out your petty cash drawer. Okay? And then you update your ledger, and there you're at right here. By closing out the petty cash drawer, you close it out for $750, so then your account is now down to zero. Okay. All right, so that's looking at a petty cash drawer. Now, again, that is maybe something that you might not need to use in your business. But a common one that you would definitely need to use is going to be a cash register. So I wanted to make sure that we kind of link this together so we can kind of understand, well, why learn about petty cash? It doesn't make sense. I'm not going to use a petty cash. Well, for sure, you will have a cash register. Okay? So, again, a cash register is very similar in context to what a petty cash drawer does. Okay? You have the two features, right? A lockbox and a ledger account, right? In this case, right, it has the same features, right? It's going to be something that has a lock on it, right, to secure the cash in there, and it spoots out receipts, okay? So in this idea, right, it's very similar in context of how we would reimburse it, but now in this case, when we're talking about a cash register, you wouldn't necessarily have means to replenish the cash register, because in this case, right, the money should not be less. It should be higher, or it should be more. Okay? So in this case, right, when we talk about cash registers, usually, right, you start the day off with a pile of money, you count it out, and at the end of the day, when you look at all your cash receipts or cash transactions, they need to match how much you started out with versus the amount that you, with the amount that you started out with. It should equal to each other. Okay? Now, of course, let's take a look at what this is and see how a cash register could keep track of your cash transactions. Okay? So again, when you keep track of it, the way that you manage a cash drawer is very similar. The way you establish and increase and closing is going to be exactly the same as a petty cash drawer. Okay. But in this case, right, this is meant because we know that with a cash register, it's constantly flowing in with cash and it's constantly flowing out of cash, right? Every time you have a sale, right, you're basically exchanging goods, or you're exchanging money, right? So if someone comes up to you and pays for something, right, you're expected to give them their exact change back, but at the same time, you're gaining a profit, okay? So in this case, right, on January 5th, right, you establish the cash register for $500, okay? You got 20s, 10s, 5s, and 1s, okay? And quarters and etc. Okay? So here you go. Same rule of idea here is that you're going to treat it just like it was a petty cash drawer, right? You're going to debit your cash register. Okay, so in this case, I have cash in the register. And then you're going to also have checking. Okay? Checking. Right? The money's got to come somewhere, right? Especially when you have to get exact change, or in this case, the exact amount of dollar bills. You definitely want to make sure you go to the bank and get that, get the exact change. Okay. Once again, we're going to be creating a ledger account. So in this case, so you know how much money you should have in your cash register at all times. In this case, we've established the cash register, okay, at $500. Okay. And then, how do we replenish it? Now, in this case, this is where it's actually slightly different than a petty cash drawer, because in this case, right, our cash register should never be full of receipts. It should have actually more cash in it. So this is where you're going to think a little differently for a cash register, but the idea is essentially the same, right? There's no need for an entry in here, okay? Because what your job is you're supposed to count the money that you have in the register to begin with, right? And then as you go through the day and you do your sales, right, your cash sales, you're going to separate that. At the end of the day, what you're going to do is you're going to count the money in the cash register, okay? When you count the money in the cash register, you need to make sure that the amount that you started out with plus the receipts of the profit that you earned is going to equal the total amount that's in your cash register at the end of the day. That's how you're not replenishing it, you're just doing checks and balances to make sure that the amount of cash and the amount of receipts match together, okay? That's the idea where it's similar to petty cash drawer, because that's what you're doing, right? You're matching the receipts to the total amount of cash. That's exactly what you're doing there, okay? But in this case, right, instead of replenishing it, right, what essentially you're going to do is, if you have too many large bills or too many small bills, right? Yes, you can go exchange it for, the bills that you need, so you have enough cash to exchange with your customers, okay? That's the one thing that you need to make sure. So that's not more so replenishing. It's more so making sure you have the exact change in your cash register. Now, what do you do with that extra money? Well, you take that extra money and you go and put it in your bank. Okay, simple, right? When you have profits from sales, you just put it right into your bank account. Okay, straightforward. But making sure you're leaving the exact amount that you start out with. So in this case, right, every time I open up my cash register, I need to make sure I have exactly $500 in there because that's exactly what I established my register for. I need to have exactly $500 in there. Okay. So again, when you replenish it, there's no need for an entry. Okay. And for any reason that you need to increase your cash register, maybe because, sales are picking up and the amount of cash in the cash register isn't enough to exchange with your customers, right? Then you can choose to increase it by doing the same thing, right? Debit the cash register and then credit the checking account, and then popping it into your ledger. Okay? Same thing for any reason that you choose to close out, decrease, or whatever it is. Like maybe you have a credit card system anymore and you only accept credit cards. And that will be a reason why you would close out your cash register. Okay? But for most cases, you would least likely close out a cash register. Okay? And of course, you do that and you say, well, I'm going to take out $750 to make my cash register account 0. Okay? So in regards to the similarities between a petty cash drawer and a cash register, they have similar in concepts. They both have the same characteristics of what they are in terms of what a petty cash drawer and a cash register does, right? It's a lockbox, and they both have ledger accounts. However, the only difference is here, right, how to establish, how to increase, how to close or decrease are the same. The only difference is how you replenish it. In this case, right, you need to replenish a petty cash drawer because you're constantly taking money out from it and putting receipts in there. Where the cash register is going to be constantly putting money into the register. So in that case, you don't need to replenish it because it has the exact money. All you have to do is just make sure you do your accounting to make sure that your receipts match the total amount that you either began with plus the profit amount that you earned. Okay? So that's the only slight difference there. But they're both two examples of what commonly happens into small businesses, right? You're definitely going to might need a minor cash expense drawer, and you for sure 100% will need a cash register. Okay? So now we're going to talk about cash shortage and cash overage. Okay? So what does it mean when you have a cash shortage or a cash overage? Okay? Now oftentimes, right, the owner of the business, right, can, let's start back. When we talk about cash shortage and cash overages, right, usually what happens, what that means is that when you do count the amount of receipts in whether it's a cash drawer or a cash register and it does not match the amount that you start with or whatever it is, right, what you established the petty cash drawer for, right, that's where you're going to determine whether it's a shortage or an overage, okay? If you're short money, if you're missing money from your petty cash drawer, that's called a shortage. If you have too much money in your petty cash drawer, that's an overage. Okay? Now, why would these things happen? Well, oftentimes, right, the owner of the business, they own the money that's in any box, whether it's the cash register, the petty cash, the bank account, they own everything. So they could be the last to close up the shop and be like, you know what? I need gas money. So I take the money out, and because the person who's the manager of the petty cash drawer isn't there, they might not be able to record it, right? So then that's why there'd be a shortage. Now, a cash overage, right? Oftentimes when you are, for example, running the cash register, right? And, customers, right, they say, oh, you can keep the change. That right there is extra cash. That's money supposed to go to that customer. So if you decide to accidentally just leave it in the cash register, then you're going to have a cash overage. All right. Oftentimes there's a tip jar, so you just throw that extra money into the tip jar. Okay. So again, there are many ways that you can have a shortage or an overage. Okay, and it's all due to whether you forgot to record it or something along the lines happened and nothing was recorded. Okay. So that's why you would have a cash overage or a cash shortage. Okay. So, well, what happens when you do have a cash shortage? Well, in this case, right, this is what you have to do. So, if on June 1st, right, you establish your petty cash drawer as $600, okay? And then at the end of June 30th, not January, June 30th, okay, you decided to replenish your petty cash drawer. By replenishing it, right, you counted that the total amount of receipts came out to be a total of $590 and that there was no cash left in the petty cash drawer. So here you are missing $10, okay? So in this case, how do you replenish the petty cash drawer if you're missing $10? In this case, right, I'm going to recognize all my expenses, right? Because I need to make sure that my petty cash drawer at all times must hold $600. In this case, I only counted up to $590 in receipts, and there's no cash remaining in the drawer. So you have two assumptions. Someone either came in and took all the money. Two, the boss came in there and didn't take some money and didn't record it, or whoever's the petty cash drawer manager did not record that transaction at all. Okay? Or second thing too is the employee that you let them borrow the money for forgot to come back with the receipt and the exact change, because that can and does happen, right? They forget to give you back the money. Okay? And then therefore the transaction never gets recorded. So in this case, right, what you're going to do is that you're going to be recognizing an account because you're missing $10, right? And that is going to be the account for cash shortage / overage. And it depends on whether you have a shortage or an overage, right? In this case, I have a shortage, okay? I'm missing $10. So what I'm going to do is I'm going to pop it in here and say I'm going to debit my cash shortage / overage account for $10. And what I'm going to do is I'm going to write another check out for the exact amount of $600. So then my petty cash drawer holds $600 at all times. Okay? What if I have a cash overage? So again, if you establish your petty cash drawer on June 1st as $600, but you end up counting up a total of receipts to be $600, and you end up having an extra $20 in the petty cash drawer, right? So this is what's going to happen. You're going to recognize that you have a cash shortage / overage, but it's going to be on the credit side, okay? And then you're going to write the check amount for the total amount of receipts that you have, okay? So, or in this case, sorry, not the total amount of receipts, but the total amount besides the overage, okay? So in this case, this is how you replenish or just having, again, a cash register. Anyways, you're going to either replenish it or, in this case, this is more so for a petty cash drawer. But yes, oftentimes you will have shortages or overage, and your job is, if you do have that discrepancies where you do have too much money or too less money, then you're going to have to investigate to see where that money went. Okay? And that is it for chapter 9. So again, we took a look at how a petty cash drawer works, how to establish it, how to decrease it, how to close it, how to increase it, and how to replenish a petty cash drawer, okay? So for this class, that's all I want you to take away is how to establish, how to increase, decrease, and close the account out. And last but not least, how to replenish it. Okay? That's it. Nothing else. All right? Any questions in regards to chapter 9?
No. Teacher,
Yes.
uh, I saw that all the feeding for petty cash from checking account, not from cash account.
Okay. Yeah.
Must, yeah, it is must, or sometime I need the bank out of the our work or something like this or closed, and I need cash now. I might have to register petty cash, debit, cash, credit.
No, if you're taking money out and you need the cash, you don't ever touch the petty cash drawer. You don't ever journalize petty cash. You just take the money out and have someone record that transaction.
No, I mean credit, always checking, not cash, the credit side.
Okay, so in this case, because where else are you going to get the money to put in the petty cash drawer? Where else are you going to get the money to put in the petty cash drawer? If you
In
have
cash.
if you have cash on hand, like because you're just walking around with $1,000 in your pocket at all times, then yes, you can do that. Yes, you can. That's not a problem. But remember, you can't be dumping your own money into the petty cash drawer just because you say you can. And on top of that, the petty cash drawer, right, must have exact change. Like, you know what I mean? Like, it must have exact amount of dollar bills in there. Where are you gonna where are you gonna have that money to go to that? You would go to the bank.
Also replenish petty cash, credit side, always checking, not cash.
Correct, because again, where are you going? Where are you going to go get the exact change to put back into the petty cash drawer? Are you gonna
So
just
even
are you gonna have just cash on here on hand?
Yes,
Well, where did that cash on hand come from?
from cash account.
Okay, so you're saying you're gonna walk around in your business with $1,000 in your wallet every single time. So then, when you're ready to replenish the cash, you just put $1,000 in there of your own money.
so I think I'm understanding him a little bit. So he's has cash in his wallet, yes, but you still got to go get it from the bank as cash, and you're
Correct.
receiving it as checking, even though you're putting it back in as cash.
Correct. Because where does so for a cash register, right?
Yes.
You may have cash in your wallet, right? But you need exact change. You need exact amount of 20s, exact amount of 10s, exact amount of ones, exact amount of quarters, exact amount of dimes. Where are you going to get that from? You're definitely not going to have a wallet full of all of that money, are you? Are you going to have a wallet in like are you going to carry a wallet with 100 quarters, 20 dimes, and exact 100 nickels? Are you going to carry that around with you?
I don't understand what you mean.
Okay. Okay. Let's say for the cash register, right? Where are you going to get 100 quarters? How are you going to get 100 quarters? You would go to the bank, right?
From checking account, yes.
Exactly. You wouldn't have 100 quarters in your pocket laying around for you to put in the petty cash drawer. Am I right? In context. So you wouldn't technically have cash on hand. But let's say, for example, right, you're running your business and you take money out from the bank and you have cash on hand, right? But that's meant for you to just go buy stuff or meant to go do stuff, right? You're not always you're gonna in context, right? Are you gonna always have cash on hand everywhere you go? You can, but that the dangers of having that as a business model is that you might accidentally use it for your own personal reasons. So cash on hand, yes, you can do that, but the idea is that it's if you have cash on hand, well, where did you get the cash to begin with? You got it from the bank account. So instead of you putting the cash into the petty cash drawer, you could just write a check out, go to the bank, and actually cash it out with the exact change. So you can put it in the cash box. Make sense?
Yes.
Okay, versus taking a bunch like going to the ATM. I'm gonna take out cash. Right? They're all gonna be in $100 bills. What purpose can you do if you put that in the cash register? You can't give anybody change. Right?
Yes.
You would have to go inside the bank to get it into the exact small change. So in this case, that's why I use checking. Now, is it always going to be checking? Absolutely not. You don't have to. If you prefer, and let's say you did have cash on hand, then go for it. You know, I don't see why not. It's the same thing, but as a business model, right? We're looking at, well, where did the cash on hand come from? It came from the checking account regardless. Yes?
Yes, thank you.
Okay. All right. All right. Okay, so let's go ahead and go over exercise chapter 9 here for the petty cash exercises. Okay, so here, questions 1 through 3 are related. Okay, so number 1 says on January 10, you decided to establish a petty cash fund for a total of $250. Journalize. Okay.
Establish petty cash checking account.
So petty cash first.
Yes.
And checking account. All right, for how much?
250.
Two. For $250. And here, I'm going to say
Establish.
to establish good. To establish petty cash. Okay. Number 2 says that on January 12th, you took $20 from the petty cash fund to pay for party supplies, costing a total of $18.57. Journalize.
Party supplies.
And what?
Debit side.
Well, okay, so what's the credit side?
The credit side. Petty cash.
No, you never ever use the petty cash drawer.
Checking.
What's the purpose of using the checking account to pay for party supplies if you took money from the petty cash drawer?
To replenish.
We're not. Are we replenishing right now?
No, we do it at the end of the month.
We do it at the end of the month. So in this case, right now, it's January 12th, and I took money out from the petty cash drawer. How do I record this?
Do you start putting down the receipt, the 1857?
In this case, when do we recognize our transactions.
Not to the end of the month.
Not till the end of the month, right? When we replenish our petty cash drawer. So in this case,
You just hold on to the receipt, or do you have to journalize this?
okay, so when do you recognize the transaction? You said at the end of the month, right?
Yeah.
So in this case, it's only January 12th. Can we recognize this transaction?
No.
No. So then, therefore, no entry here. Okay. We haven't reached the end of the accounting period yet, or whenever the petty cash flow runs out of money. We're not at that point where we need to replenish it. So in this case, January 12th, yeah, we took money out, but that means whoever's in charge of the petty cash drawer is going to record that. But that's only $20 out of the $250 that we had to spend. So in this case, we don't need to record it because as you use the petty cash drawer, you never record it. You only record it at the end when you replenish the petty cash drawer. So, exactly right here where it says on January 31st, you counted a total of receipts to the amount of $179.65 and a remaining cash of $70.35. Replenish the petty cash drawer fund.
So since you can't itemize it, do you just put receipts?
In this, yes. In this example, I didn't list out the actual items, but yes, that's correct, right? In this case, you would just put receipts, okay? Because I didn't tell you this was office supplies, this was business supplies, this was party supplies. No, I just gave you a generalization saying, hey, you have a bunch of receipts. So in this case, so what was it, January 31st? I'm just gonna write it down as cash receipts. Okay, and
Debit it for 179.65.
debit for 179.65. Good.
And then do you then write cash as well on
Now,
the debit side, or no?
on the debit side,
Or no, it's on the credit side because then you don't have to add that back because you already have it, correct?
correct. So in this case, right now I have $70.35 in my cash register or my petty cash drawer, right? That's the amount of cash I have left. Now, how do I put money back into that register or that petty cash drawer? Well, simple, right? I take all the receipts for the amount of $179.65, and I'm basically going to convert that and pay it off with the cash. So then I'm going to replace the receipts with cash. Okay? So that's exactly what I'm doing right here. And how do I replace that? I pay for it, right, with my checking account. I pay for it for the $179.65. And what I'm going to do is that money's going to go back into my petty cash drawer. So then now I have $250 left to spend in my petty cash drawer. So that's exactly what I'm doing. That's how you replenish a petty cash drawer, is that you basically are going to count all the receipts and basically pay for all those receipts. So then all that cash, by trading in all those receipts, that cash is going to go back into the petty cash drawer. Okay? Good. Okay?
Teacher,
Yes.
what is the details of cash receipt expense?
It could be anything because I didn't specify what it was. So in this case, like for the when we dive into the chapter 9 and 10, I'll be more specific on what those items are. But cash receipts, expense, whatever. Okay, I guess I'll put that in there. Expense could be anything. It could be party supplies. It could be business supplies. It could be office supplies. It could be anything. In this case, I did not specify anything. So if you really wanted to, you could just call this, instead of cash receipts, you could call these all business expenses. Okay, and then I'm going to put receipts. You guys know what these are. Okay. Okay. You can just call them all business expenses. Okay.
Without details means supplies for badges or something like this.
If I have to go out to buy postage stamps, yes. But in this case, I didn't specify. I'm just giving you a general idea here.
Okay. Thank you.
All right, everyone good with me so far?
Yes.
Okay. So then, let's see. Assume that questions 4 through 6 are not related to the previous questions. So again, question number 4 says that on February 1st, you decided to establish your cash register to be $500.
So you're gonna debit petty cash for the 250 and then checking credit 250?
So in this case, right, questions 4 through 6 are not related to the previous ones.
Okay, so then 500, sorry.
Yeah, so in this case, I'm starting all over, right? In this case, I just wanted to make sure you're able to understand how this is another different scenario. So we learned how to establish it, right? We learned that you don't do anything when you take money out and how to replenish it. So now I'm starting over. It is February 1st, and this time I'm opening a cash register. Not the same thing as a petty cash drawer. Okay.
Cash and register debit.
Yes, you could do cash in a register debit
Credit checking.
and credit checking, right? For how much?
I have 500.
For $500. Okay. And then of course you could put here to establish
Cash and register.
cash in the register. Okay. Question 5 says, then on February 15, at the end of the day, you counted a total of $156 of cash receipts and a total of $656 of cash in the cash register. Replenish the cash register.
So you're gonna debit receipts for the 156 and then credit checking for 156?
In this case, this is a cash register, right? If we started the cash register with $500, right? Why do we need to put more money in the cash register when we have $656?
I was just thinking because it says to actually replenish it. Otherwise, you won't do it till the end of the month.
Okay, but in this case, this is the context of a cash register.
The different deposit to checking account.
I'm really confused.
Okay, so remember, petty cash and a cash register, they are similar in concept, except the difference is how you replenish it. Do you ever need to replenish a cash register?
Oh, no, because you're just adding to it.
Exactly. You're just adding to it. So in this case, do you ever need to replenish a cash register?
Nope.
No. Okay. So what's going to happen if I don't ever need to replenish a cash register? There's no entry needed involved. Because in this case, right, we're gaining money. We're always going to constantly be adding money to the cash register. So there is no real reason to need to replenish it. However, the only thing that you need to do here is you need to match the cash in the register with what you began with plus the amount of profits that you got from your cash receipts to equal up the total amount that you have now in the cash register, which I'm not going to test you on, right? So in this case, no. This cash register does not need to be replenished. Okay. question number 6, on February 23rd, okay, you decided to switch from a cash register to credit card only, okay, transactions, okay? So in this case, we need to journalize the closing of the cash register. So how do we close out the cash register?
Checking account, debit, credit, cash in register.
Good. So in this case, right, what are you going to do with $500? You're not going to pocket it and walk away. You're going to put it directly back into the bank account because that's going to be money that you're going to use for the rest of your business. Okay? So in this case, right, if you have a cash on hand account, use it. Go for it. You know what I mean? But in this case, like I'm saying, like as a real business tactic, you should never have cash on hand at any time unless you're using the cash on hand as a form of cash in the register. Okay? So in this case, how much am I going to take away from my cash register?
500.
If I established it at 500, then therefore it's going to close out at 500. Okay? All right. To close out cash in register. Okay? So I have, okay, so let's go ahead and do the last 2 questions here. So number 7 says, if you have established a petty cash drawer fund for $200, okay, and at the end of the month, okay, you calculated a total receipts to be $155.20 and a cash to be $50. You have a blank in the petty cash.
You have over
Good.
$5.20.
Good. You have an overage. Right? You have too much money in your petty cash drawer. Okay? If you have established a petty cash drawer for $200 and at the end you calculated a total of receipts to be $150.54 and $24.46 cash remaining, you have a blank in your petty cash.
Shortage.
You have a shortage, right? You have what is that? $5 and some cents shortage. Okay. All right. So in this case, right, we're a little confused on what a petty cash drawer does and what the difference between a petty cash and a cash register is, right? So when we establish a petty cash, right, our main goal is that that money is meant for minor business expenses. So if someone decides to come in and say, hey, I need to go run to the store and buy some printer paper. They'll take money out from the petty cash drawer, but at the end of the day, they have to come back and bring it back with the receipt and the exact change. So then now my petty cash drawer has some money and a receipt in there. Okay? At the end of a given accounting period, at the end of the month, typically at the end of the month would be a good way to measure your petty cash drawer, right? At the end of the month, your petty cash drawer should be full of receipts and maybe a little cash left over. Okay? So in order to put more money back into the petty cash drawer, you're going to count the total amount of receipts, right? And basically you're going to cash in those receipts, if you think of it that way, right? You're going to take those receipts and you're going to convert them into cash. When you convert those into cash, you bring it back to the petty cash drawer and fill that money back up so that now you are exactly where you started from the very beginning. Okay? Where a cash register, right? The way that we treat the cash register is similar to a petty cash drawer, right? We establish it with a certain amount of money. The way we increase it or close it out is all the exact same. The only difference is that with a cash register, as you're, the thing here is that with the cash register, when you make a sale, you're collecting money in opposed to taking out money. Okay? So as you collect more and more and more and more money, at the end of the day, you have a pile of money in your cash register, right? And on the side, you should have a pile of receipts. And what the idea here is you're counting the total amount of receipts and you're counting the total amount of cash to see if they match on both sides. Because at the end of the day, right, instead of replenishing the cash, right, you're just matching the receipts up with the total cash that you've earned. All right? So in this case, you don't need to add money back into the register. You are going to cap it off. So you're going to count the same amount of money that you started out with the register, and you're going to take that money that you earned profits, which should match your receipts, and put that in the bank. Because that's money that you earned from sales. Where it's in opposition when you're dealing with a petty cash drawer, you need to take those receipts and convert them and cash them out into cash to put back into the register, or sorry, the petty cash drawer. Okay, so that's the only difference. Okay, they both function the same exact way, that they're a physical lockbox, right? You wouldn't have a cash register you're able to open at any given time, neither for a lockbox, right? You don't want people to steal from the company, so you want to make sure that is there. And they both have some kind of ledger account for you to keep track of your transactions. Okay, but one of them is you're taking money out and you need to reimburse the money that goes back into that petty cash drawer, while the register, right, is producing money. You're increasing your cash flow, but the difference is that you're increasing it by the amount of total receipts that you've sold. Okay, so that's the huge difference between a petty cash drawer and a cash register. Now for this class, I'm not going to go as far as into details because you may not need a petty cash drawer, or you may not even need a cash register, okay? I'm just saying that most common things is that in order to really understand a petty cash drawer, the greatest example that is similar to it would be a cash register, and that way it's a little more relatable, okay? But in regards to understanding how we do this, all I'm going to test you for this is, can you establish a petty cash drawer, and can you replenish a petty cash drawer? And that's it. Right? Any other questions? This is not our first time we're going to be looking at this, okay? We have a chapter 9 and 10 review. That's going to be next week. And we also have the study guide to go over chapter 9 as well. Okay, once again, this is a very minor. I wouldn't focus too much energy on chapter 9. It's just this is what you normally see in a business when you do establish a business, that this is the typical things that you would kind of need in order to keep track of the money, right? Okay. Any other questions in regards to chapter 9?
Teacher, I have a question of the money over the in cash register, the money of the 500, like this no entry, the question, the no entry, yes, here.
Mm-hmm.
Yeah, you mean this any over of the money of the 500, it means sales, and I have to deposit to the bank, and I have to keep just 500 in cash register.
Correct. So in this case, right, the amount of money that you earned over is your profit. That's the money that you earned from sales, right? That's your profit. Now, in this case, if I am okay with having at least $500 in my cash register, that's enough to get me through the day, and that's exactly enough for me to exchange with my customers, right? If I choose to keep that money into my register, I would have to debit my cash and register again, right? Because I am increasing the cash flow.
What credit for this 156?
You would in this case, right? This is money from sales. So this money would, if you want to, you can do it. You can say that this money goes straight to the cash register, but it's the same thing with petty cash, right? You never use petty cash for establishing your or sorry, you never use the petty cash account unless you're increasing, decreasing, or closing out the account. So if I have a sale, right, I'm earning the
Yes.
money. Where's it going to go straight to? It should go straight to your checking account because that's the money that you've earned from sales, right?
Yes.
You wouldn't debit it into or credit it into your cash and register unless you're planning to keep this money amount in the cash register. Then then yes, you have to. So let's say I start out with 500 and now I want to keep 600. Then I have to make sure that I make that journal entry to increase the cash in my register.
Yes.
Okay. And we'll take a look at an example of this also in the fictitious business. So, yeah. All right. Any more questions?